Hello young traders, doing trader once again from DRFX, Swing Trading Mentoring. Gonna take another look at the situation now on the Euro Swiss franc, which is in a strong downtrend on its daily chart, as well as a consolidation setup on its forward chart. So we're gonna be taking a look at the trading possibilities that the market could provide us on the forward chart, given the strong downtrend that is in place on the daily chart. Now, just a quick overview in terms of how we go about identifying market direction and trading opportunities once again. Basically, what we do is identify market direction using the signals and patterns that are provided by the daily chart and the 4-hour chart. So essentially what we do is identify whether or not the market is trending in an uptrend or downtrend, or whether it's moving sideways in a consolidation pattern. Once that is determined and we see a trading possibility, entry then takes place using the signals and patterns provided by the 4-hour chart. Now, in some cases, we'd also enter the market using the signals provided by the daily chart as well. But most of the opportunities that we identify are provided by the 4-hour chart. Now, when entry takes place using the 4-hour chart, we would use this time frame to identify a stop loss. However, if the stop loss is going to be too far, we would also go down to the 1-hour chart to protect the trade. However, if entry takes place using the signals provided by the daily chart, we would only use the 4-hour chart to identify a stop loss to protect the trade for those types of entries. So that's it in terms of the overview of how we go about identifying market direction using the candlestick patterns, trend lines, and consolidation setups that are provided by the daily chart and the 4-hour chart. Now, in terms of identifying trading opportunities and how we go about trading the main trend direction, since the overall direction of the Euro Swiss franc on the daily chart is bearish, as we'll see in a while, I'm going to basically describe how we go about identifying trading opportunities to take advantage of this movement. Now, basically what we do is that after we have confirmed that the market is in a strong downtrend on the daily chart, essentially what we would do is to continue to trade in this direction until the market hits a major support target at which the trend will normally end. So as long as the market has not reached a major support point, we can continue to trade in this direction and capture trading pips along the way. So now when the market is moving within a downtrend, what you will notice, of course, is that the market will wave occasionally on several occasions, pulling back and hitting the trend line before U-turning to continue the downtrend. Now, when it pulls back to these trend lines, it will normally do one of two things. It will either move sideways and form a small consolidation setup, either on the daily chart or the 4-hour chart, or both at the same time, or it will simply pull back and then U-turn to then continue the downtrend. Now, in the case of consolidation setups, which we're going to take a look at on the 4-hour chart, when we're trading these movements, we would only be trading the bearish signals because these would be in sync with the current direction of the market. The reason for this is that the signals that are provided by the market that are in sync with the main trend direction are usually more reliable and stable because they're basically getting the support of the short positions that are controlling the market at the time. So that is why we would prefer to trade only the bearish signals that are taking place within consolidation and ignore the bullish movements that essentially would be taking place against the main trend direction. And generally speaking, with regards to trends, as you know, trading against the trend is always risky because you do not have the support of the market, and so you're basically trading against the wave of the market, the tide. And so the signals that are provided as the market is moving against the main trend direction are generally riskier and less reliable. So that's why we ignore the bullish movements that take place against the main trend direction, either when it's within the context of a consolidation setup, as well as in terms of a counter trend line pull back like this, where the market simply pulls back and then U-turns to continue the bearish direction. So that is how we basically identify trading opportunities within the context of a major downtrend, trading within consolidation as well as trading breakouts, trading only the bearish signals that are provided as part of this setup. And when it comes to counter trend line setups as well, we ignore the bullish movements and trade only the bearish signals that break the counter trend line to indicate the continuation of the downtrend. Now, as you can see here on the daily chart, or well, the wider view of the 4-hour chart, which is also the situation on the daily chart as well, market has been in a strong downtrend for quite some time, for most of this year, allowing us to draw this major outer downtrend line as well as this inner downtrend line. Now you can see that the market has moving sideways, which has led to the formation of a consolidation that has been formed in between the inner downtrend line and the outer downtrend line. So given the fact that we're in a strong downtrend, the priority is going to be given to bearish signals and bearish movements that are in sync with this direction. Now, taking a closer look at the situation on the 4-hour chart, you can see that the market has actually formed two consolidation setups in the form of ranges. A larger range setup with this resistance and support, as well as a smaller range setup that has been formed over the last 24 hours. So now in terms of trading possibilities and what we could see in terms of movements, of course we will be ignoring the bullish movements because these will be riskier. So what could happen is that the market this could actually be a false consolidation breakout reversal where the market fails to break out at the resistance and then U-turns and takes us back inside of the small consolidation and then hits the support point. Now, false consolidation breakout reversals, quickly, from the trading manual, are basically situations in which the market will attempt a breakout at one end of the consolidation but fail and then be taken up by sharp reversals that take us back inside of the consolidation, and in most cases it will start a breakout at the other end of the consolidation. So this is what could be taking place right now, where the market would encounter a lot of short position selling at this area here, because we're basically be moving against the main trend direction of the market. And as you will see described in my trading manual as well, one of the main reasons why we see false breakout reversals take place is that the breakout, if the initial breakout attempt is taking place against the main trend direction, then that will be one of the ways in which the market will actually fail in that breakout attempt, because the momentum of the market is not supporting this breakout, and so it is easily taken out by the reversal that is in sync with the main trend direction. So that would be the reason behind why this reversal could take place and take us back inside of this small range consolidation. Now another possibility, basically similar to what could take place in this area here, we could actually see the market rally a little bit higher and actually hit the resistance of the larger range setup. So if that takes place, then the reversal would take place because it has hit this resistance boundary, and then U-turn to take us back inside of this smaller consolidation before eventually breaking out and taking us toward the support boundary of the larger range setup. So again, the preference would be to trade in the direction of the trend, and this would be facilitated by the false consolidation breakout reversal that could take place either at this area here just above the resistance of the smaller consolidation, or at the resistance of the larger range consolidation setup. So that's it in terms of the analysis of this situation on the Euro Swiss franc. Strong downtrend, which has been in place for most of this year, and so the preference is to only trade the bearish movements that are provided by the market, that are in sync with this trend direction. So if we're going to be trading within the consolidation setup that has been formed on the 4-hour chart, the priority is to focus on the bearish movements that will take place that will be in sync with the movement that is taking place, will be in sync with the main trend direction of the currency pair. So we're going to be looking out for those two possibilities in terms of where the market could start a reversal, analyze the bearish signal, and then make a determination if this signal can be traded as the market resumes the movement bearish. So that's it in terms of this analysis on the Euro Swiss franc. As usual, if you have any questions, you can let me know by emailing me at shepherddoing@gmail.com. You can also find me on Instagram at drfxtradingboss, as well as my website swingtradingmentoring.com. You can also find me on Facebook and Baby Pips using the same username drfxtrading, as well as on Twitter at worldwide876. Of course, when you check out my website, you will see a full description of the trading methodology that I now use, as well as the description of the trading manual, the trading signals, and the daily videos that I provide as part of my mentoring service over 3 months, as well as the Skype mentoring service that is also provided, as part of the VIP service over 6 months. So until next time, traders, happy trading and all the best.